Square shares are having their worst day since November of 2017. Weak guidance, a rare double downgrade from Evercore today. Square cut to underperform. $64 is the price target. It's our call of the day for a stock that's well regarded. Jenny?
So this is my 1 year. August is my 1 year anniversary on CNBC.
Okay.
When I was on last August, we were talking about Square. There's a huge positive upgrade. And I said, I can't buy Square at 100 times, makes no sense, but I did own Fiserv at 20 times. Fast forward a year, Square is down 15%, Fiserv is up 31%, so I'm still sticking with, I agree with the downgrade, still way too expensive, more downside to go, and you might look at Fiserv instead.
Okay. Jenny's happy.
I'm so happy.
I just want to say happy anniversary.
Thank you. Thank you. I was waiting to brag. As soon as I saw that earnings
Pat
come
yourself
out,
on the back
I
a
was
little
excited.
bit. That's okay.
Thank you. I was very excited.
Need longer arms.
Yeah, you just pictured Jenny sitting back watching old clips of herself on
as I said,
No. When it's your first show, you're so scared you remember everything.
Square has had a nice run, okay? This
yeah, I was going to say it was 16 a year before that. So, I mean, depending on when you bought it.
It's been dark. It's been a momentum
stock. But it's expensive.
You get a double downgrade, and you have the guidance, which was the issue. So what do we do with it now for a stock that's still up 22% year to date, wiping off a good chunk of what was a better gain with today's smash? Josh?
Well, I think if you're a momentum trader, you're not in this stock right now. Like, it's on your list, it's a name on your radar, but this is clearly broken. It's like the trend is not there. So if you're a trader and this is your universe of stocks, you're in the IBD 100 names, and you're buying the biggest, most high octane growth stocks in the Nasdaq and in the S&P. This was one of your staple names that you went to. You bought the dips so long as it held its trend line, but it's broken. And by the way, PayPal just broke down too. So these stocks have to reset up again before that crowd takes an interest. And by crowd, I'm not just talking about human beings. I'm talking about probably $1 trillion worth of software programs that are doing those same trades, and they're doing them faster. So that's where these stocks are. Jenny's right. They're not cheap enough to find their way into the hands of, quote unquote, value investors, if there are any left. But they're also not going to be played by momentum traders. So I think they're in a netherworld. And so what do you do with it? Here's the good news. You can keep the bat on your shoulder. There's no three strikes. You don't have to be involved.
But you buy MasterCard or Visa or AXP.
Or Fiserv.
Here's the Fiserv.
Also expensive, but they always have been. They always have been. MasterCard, Visa.
We were talking earlier in the A block about what's going to work going forward. There's a lot of things that are going to work. What's not going to work is a high-priced stock that disappoints.
Right.
And when you think about the fundamentals of the consumer right now is carrying this economy, and Square is tied to the consumer, there's no reason to own the stock. Whether it's fundamental, momentum trading, there's just no reason to own it.
You see, sometimes people go into these stocks because they've come from nowhere, they're the new thing, and the momentum carries them. And they forget that they're not breaking new ground necessarily. It's a competitive marketplace. So I like the tried and true of Visa. That's where I am. That's where I've been. Sure, it's higher than it's been valued historically, but I believe the market should get a premium multiple. Visa doesn't have the same volatility as these high-growth names, high multiple names, and I just don't believe.
I'm in MasterCard for the same. I'm in MasterCard for the same reason, but it's an extremely crowded trade. Like, to your point, no one's discovering MasterCard. Everyone that is in these types of stocks has already been there, has added, has possibly traded in and out. So when people decide that a story has changed or they're on to the next thing, these things will whipsaw you. So you have to decide: are you an investor or are you a trader? Depending on the answer to that question, that'll determine whether or not you're trailing it with a stop loss, for example. And then what kind of trader am I? Am I a swing trader? I'm probably using a 10-day MA, maybe even an EMA. If you're an investor, you're saying, I hope it breaks down,
right,
and I hope they have a disappointing quarter, because I don't own it, and I've always wanted to, and that'll be my chance.
And then you figure out what kind of investor you are. Are you, to Jim's point earlier, are you a value-leaning investor, and you're looking for a margin of safety?
Do you agree the most dangerous thing you can be in this tape or any tape is someone that somebody that doesn't know what they are?
Yeah, and
that's true in life, but especially in investing.
Of the so-called Dorsey stocks, Twitter and Square, it's everybody's taking Twitter.
Yeah.
Today?
Yeah.
Oh, yeah.
The Jack Dorsey.
Even I own Twitter, but that's just for myself.
It's the rotation. They're going from one of his companies into the other.
This whole space has had just an unbelievable move. You look at global payments. I mean, that's not a cheap stock either. They've executed and continue to execute, but still, you got to worry about a stock selling that kind of multiple in this business.